in my video so far is that when you are drawing a wedge breakout, you really do want to insist that you have a strong for example, if this is the price pattern for a stock, something like that, and you're hoping to find a rebound, is you want to make sure when you're drawing your wedge that the RSI where the top lines begin is corresponding with a significant high in the stock. And this is very important, because if it's not, if the RSI top line does not begin with a significant high in the stock, then your buy points always tend to be weak, and they only give you short-term price moves when you use or when you employ the wedge breakout. So it's very important that when you're using the wedge breakout, especially on a daily, and especially even on an hourly chart, you want to make sure, if it's an hourly chart, the best way to use an hourly chart is to make sure that your RSI line, top lines, are based on a significant high, preferably a 52-week high. Otherwise, when you use any other kind of RSI top lines based on a relatively weak intermediate price high, then your price or your breakouts don't tend to give strong buy signals. And I'm gonna I'll look at some examples to clarify this point, but your RSI top line should always be corresponding with a significant high in the price, which means that it is really based on a strong sentiment when the stock was strong, and not just the wedge breakout is not based on a weak high. Let's look at some examples. This is Apple. Actually, I think I wanted to start with a different go back and remove that. That's fine. Okay, let's look at Apple. Now, you know, it made a high late last year in 2007 with around $200 and dropped all the way to around 115. Now, because this high here is significant, it's a strong 52-week high. Actually, I think it was a multi-year high. Any relevant wedge breakout right there, we see a wedge breakout. It's pretty much the only and this one is actually a very good breakout because it is moving above 50 and also giving a, and you can see there's a small blip where the RSI tried to move above 50, failed, or actually settled down for a little bit, and now we get this price move above 50 for the first time in about 2.5 months. And this is based, this RSI top lines is based on a significant high. So we know this buy point right here is going to have a high odds of now the wedge breakout is this right here, right there, and this lows right there. So this break is where we are seeing the wedge breakout, and that bounce should be strong based on the fact that we are using a high a strong RSI buy point, and the stock managed to bounce from around 115 all the way to around 190. So that was a huge jump in a couple of months based on this wedge breakout. Now right now what Apple has done here lately is that we saw a price surge from around 155 all the way to 180. Now because if you draw a wedge, this wedge right here, and this line right here, this breakout, even though it's a buy point, there are certain things that are not in favor. One, this is a weak RSI top because the high is not significant. It is not a 52-week high. So whatever buy point you get from this kind of wedge is going to be relatively weak. The other thing is you notice that it's breaking out from way south of the 50 line, which means any buy point is going to really not be as strong. You want them to move above 50. That's where the mathematics changes in favor of those who are long the stocks. When you get a wedge breakout, as I've discussed in a prior video, when you get a wedge breakout south of the 50 line, they tend to be relatively weak unless the stock has a history of moving its RSI continuously for a strong stretch of time. So you see those two reasons made. The only bounce we get from the stock is from around 155 to 180. Compare that to the prior swedge breakout right here, which moved the stock from around 115 all the way to 190. So again, you see, you want the fast bounce, especially on the daily, where the RSI tops are significant 52-week highs. Any other subsequent breakout is going to be muted and weak, and that's why you see the stock finally it seems to be stalling. So watch out for strong buy point signals based on the swedge, and just understand that any breakout based on relatively intermediate price highs is going to give you muted results. Now again, we look at TBSI, a shipping stock. Again, it made a high around 67 in November 2007, and then lost most of its gains, dropping all the way to 20, a significant drop. And you can see when we get the fast swedge breakout right here, this is a significant high. This swedge breakout right here did actually move the stock from around 0.20 all the way to just above $40. So that's a 100% move in under a month. So this significant high makes this a strong swedge breakout. It wasn't moving above the 50 line, so you know the move is going to be not as strong. And then we come back, so there was no point to own the stock after this buy point here. You don't get another swedge breakout, and the next swedge breakout comes here, and you can see that. And again, we are using a strong RSI high based on a strong higher 52-week high closing high. So that's a strong RSI swedge right there. Now we are moving again above 50, so the mathematics in the stock is changing. We have a swedge breakout based on a strong high. It's a strong swedge breakout, and that did manage to move the stock from around 32 all the way to just under 62. So you have a 90+% gain in about a month and a half, just based on where the strong point of the buy of the signal is. Now notice I'm going to leave these charts. If you study the charts, you'll see that the best time to get out of the stock is just to draw a trend line below the RSI lows, like right there, that box. And then again another, we break this, we try and go below 50 and we get support, and then finally we crack below 50, and then there's a wedge breakout. There's a wedge breakout there and that line. So when we break below that, the stock is in trouble, and that moves the stock from around 42 all the way to around, and still dropping around 27 and something. So the next buy point is going to be based on this high. Actually, if we get a buy point in the future above the blue line, that's going to be the best entry point, because it's based on a significant high. Any swedge breakout based on this RSI stops here, double top here, is going to be relatively weak, and the move is going to be not as strong because this is not a significant high in the stock. So any breakout here is not going to be as strong based on those details. Now the next one is give me a second here. Let's look at the US dollar. Now US dollar had a great move in July and August. This is a weekly chart going back 1, 2, 3, 4, I think 5 years weekly chart. And you see, because the RSI was here at 60, above 68, around 70, based that high of around 92 is a significant high, and we have this wedge formation shown with the blue line right here. And when we moved above that, see, we had spent almost 2.5 years below 50, and that's why the dollar was weak on the weekly chart. The dollar was weak for a long time because we mainly stayed below 50, and now here we come again. We are moving out of a wedge formation, and we're also moving above 50. So these kind of breakouts are very strong, as I pointed out, and you can see the dollar this particular time is showing a lot of strength. It might consolidate before it moves up, but this is a material change in sentiment. So the point of it is that this is a strong wedge breakout because it's based on a strong closing high. The last one on this set of examples is a DSX. It's a shipping stock. Again, it formed a high around $40 in November 2007, dropped all the way to 19, so lost more than half of its value. And because this wedge formation eventually would come to be in the green line, would form a nice wedge, very beautiful. And we tried to move above 50. We stalled exactly on the line. We came back and dropped below 50, and now we are moving, breaking out of that formation. And that was a strong wedge breakout because it's based on a strong daily closing high, and we are moving out of a great wedge breakout into new territory above the 50. So the mathematics are in our favor. So the next buy point for this stock is going to be based on this these highs right here. And because these highs are not as strong as these highs, any wedge formation like shown by the blue line is going to give you not a strong move as you would expect, because it's not based on a significant high. So the point of this video is to show you, make sure your wedge, the best wedges are the ones that have a significant high either on the hourly and most importantly on the daily. This is Eric Mwale with Mwale.com. As always, peace and blessings to you.